All right, Ernie, I need you to break down the process for me. Show me the methodology behind becoming your own banker.
Yeah, sure thing. You say show me, so let me show you. If you're watching on the YouTubes, it's your lucky day. Fortunately, you mentioned that the book, Russ, Becoming Your Own Banker, some of the things that Nelson Nash said. He also said on the very first page that this is a really simple idea. It's not complicated. What is difficult is just changing what you've thought about things so far. So this concept of becoming your own banker, it is a process. What is the process of becoming your own banker? Well, it's about banking. It's about you doing that in your own financial world. So how do banks work? It's very simple. There's three main components of what a bank needs and what a bank does. The first thing that a bank does is it needs to be in business. The way that a bank gets in business is it gets capital. And it gets capital by the principals of the bank putting in money. What really helps it take off is attracting depositors. A bank attracts depositors, and depositors put their money inside the bank. So in order for you to become your own banker, you need to start taking your dollars and storing them. We're going to talk about the product that's most suitable for that. But the big idea is get money and build it up inside the bank. That does not keep a bank in business, but that certainly helps the bank get in business and grow their business. The next thing that the bank does is it looks for opportunities to lend money to borrowers, to take that money that's been stored and to send it out for productive purposes. And so another way to summarize that is to say that a bank is in business to generate loans to borrowers. So in this concept of becoming your own banker, you have an opportunity to control all three of these pieces, to store your dollars and then to lend them to finance the things that you need, liabilities and assets. And when you do that, it is your responsibility as the borrower, when those dollars go out, to bring them back into the bank so that you can continue repeating this process even as you continue to grow your quote unquote deposits in your system. That's the process, the simple process of becoming your own banker.
What's the most important resource that you have? If you really thought about this deeply, I think you'd come to the same conclusion that Joey and I did. It's time. In our newest book, What's Without Wall Street, The 3 Steps to Financial Freedom Through Passive Income, we talk about how are we tracking that time? What is the thing that we can do to get more of that time back?
That's right. If you've ever been listening to our podcast and thought, man, it would be amazing if I could take all the things that you guys have learned over the last 10 years and just summarize them, put them in some way to easily digest them and take action, that's what this book is all about. You're not going to want to miss it. Go to wealthwithoutwallstreet.com/new book and get your copy today.
Thank you for drawing that out. You know, I love visuals. I love to see how we think. And if we understand that a bank has obviously been very profitable doing that model, if we could only implement something similar in our lives, what could that open us up for, right? I think one of the things that Nelson talked about, the most important part of this concept is imagination. And he called it the infinite banking concept, meaning that there was no limit to the ideas and the uses that we could come up with. And I've seen not only the two of you guys, but other coaches and our clients who use this in such creative ways. And I want to talk about some of those in a second. But first, let me get around to the product. You said that there's a good place for us to put this, and not everybody talks about the product, but you know, the key is you are a superhero. You are the hero in this story. You're the person that's going to have success, is going to win big. And, you know, I'm not a huge superhero fan, but I follow and I track. I see these superheroes have their own tools, right? Thor has the hammer. The Green Lantern has the power ring. Joey's favorite character, Wonder Woman, has the lasso of truth, right? Now I can say that because he's not here and I can just make fun of him. That's cool. But also I did a little bit of analysis on that and I realized that there's actually commonalities in superheroes' tools as well. They enhance the ability of the superhero. They are often versatile, as well as they are strategic in their use. Now, Jamie, would you say, as we describe the product, the use the tool that we use most frequently for becoming your own banker in the infinite banking concept, that it meets those criteria? What else?
I think it absolutely meets that criteria. And for those of you that don't know the product we're talking about, it's simply put, specially structured dividend paying whole life insurance policies. We use those to store cash in our bank. We make deposits or pay premiums into those policies to use, as Ernie described, in becoming our own bank. You may hear a lot of noise out there. We've dug deep into this on several other podcasts. I want to give you kind of high level, but go back and read some of our podcasts or listen to some of our podcasts. But you hear noise out there from others that promote IBC with other products, right? And we know that dividend paying whole life insurance is the best product and the best option for implementing this strategy. I mean, simply put, if I'm trying to implement a forced savings strategy and make deposits into my bank, I'm going to want access to that cash for opportunities, right? And so that's one of the benefits is I get nearly instant liquidity of most of my dollars when I first start this banking business. Whole life also gives me the best guarantees and the most safety possible, right? So when I think about where I'm putting money to store or to starting my bank, I want as much safety and as much guarantee around that as possible. You know, some of the benefits of these whole life policies, whole life contracts are, you know, safety, liquidity, guaranteed growth, access to dividends, non-guaranteed dividends, tax-free access to the money through loans. We're taking loans from the insurance company, true uninterrupted compound interest on our money, right? Creditor protection. I don't know about anybody listening to this. That was big for me as a real estate investor, owning a real estate business, of having protection of my dollars. And then obviously the built-in legacy we have as well for our family. And so, I mean, simply put, that's what we use as the product. There's other products out there that are marketed with IBC, but we know that especially structured dividend paying whole life insurance contracts are, in my opinion, the best product for becoming your own banker.
Well, oftentimes people will talk about other products as if you should and can use those other products. And if you open up the book, Becoming Your Own Banker, and you flip to page 39, Nelson Nash will address those. And he'll talk to you about what his actual thoughts were, his experience, because he was in the life insurance industry for almost 50 years. And so you can go and read what his thoughts were. That's coming right from the horse's mouth. Where did this idea come from? It came from the book, Becoming Your Own Banker. It came out of the mind of Nelson Nash. And he had specific thoughts around other tools where people would try to use this concept. It is a concept, but the tool often used, as you said, is dividend paying whole life insurance company policies with a mutual company, meaning the policyholder is one of the owners. Now, let me talk about what it's not, right? Infinite banking is not a velocity banking concept. If you have been around at any length or in financial circles, oftentimes this concept of velocity banking comes up and people confuse the two. They go, oh, I've heard about this thing called velocity banking where I get some sort of line of credit. I use that line of credit to pay for my debts. I deposit 100% of my income into that account. And then I pay down the debts. I pay down the interest expense by doing it. And that's going to magically make me successful. This is not velocity banking. Infinite banking has nothing to do with that. In that tool, you're not building equity in any sort or shape or form. We want to build equity. We want to create an asset. Infinite banking is not velocity banking. It's also not an investment strategy. I think sometimes people compare it to investing in real estate. Jamie, you mentioned real estate, investing in businesses, investing in the stock market, investing in qualified plans or whatever. It's not an investment strategy, right? It is simply a cash flow system for your money. It's a place for you to hold capital within the life insurance product itself and then deploy to take over the financial function of your life, whether that is buying assets or reducing liabilities. Remember, financial freedom is when our passive income is greater than our monthly expenses. That's how we know to deploy capital, when it does one or the other. Lastly, it's not to buy liabilities and grow wealth, meaning we cannot go out and just buy cars, buy vacations, spend money, and magically become successful. Now, you mentioned that it is a way for us to be a forced savings plan, right? So if we're going to buy cars throughout our lifetime, Nelson Nash describes that in the book. He describes how if you're saving money at two different locations, how this would be better than location A. That's true, right? But it's not a concept of how to go spend money and make money. It's a concept of how to act as a bank for all financial needs that you will have over time. And through the discipline of following the process, you will then have more access to capital that will allow you to do more things in your life. Now let's jump into my last point. I like this point, guys. Hope you like this point. And for those of you who grew up in the 90s like me, you probably watched the movie Jerry Maguire. There's a scene where Tom Cruise is there talking, and they're in the men's locker room, and the actor, the football player, comes out and says, "Show me the quan." He starts talking about quan. And Ernie, I don't think you understand what quan is. Quan is the love, it's the respect, it's the community, it's the dollars too. It's the entire package, as he said in the movie. So I want to hear from you, Jamie. Tell me about quan. Show me how this infinite banking concept of becoming your own banker actually works.
I mean, the first step in this is, we've kind of alluded to it, is save money. I mean, that's really what we're trying to start doing and putting it into a most efficient system to do that, right? And so how we do that is when we work with people, we're going to set this up together. We're going to come together, go through the family financials, as Ernie alluded to early in the episode, and we're going to come up with an amount that you need or want to save to accomplish the goals that you've set out for yourself, right? And so when we structure that policy, we're going to structure it according to those goals and allow you to save that cash that you need. Start saving that cash or depositing that cash in your bank. You know, I think about this as a forced savings plan. I've said that already. It's kind of like a savings account on steroids. It's not the same thing. It is whole life insurance, but that's how I think about it in my mind. And so how it simply works is you pay your premiums, which gives you a cash value, right? You use a cash value as a loan from the insurance company, and we start to pay that back while your cash value continues to grow uninterrupted. And so you mentioned, Russ, that if we kind of follow this process, it's called the infinite banking process, or infinite banking concept, for a reason, right? And a quick example of how I personally started to save money in a way that I never thought about to begin with. When I first started infinite banking, it was purely to save money in a place to use for real estate investing, right? And as I started to make investments, I was a good banker, a good business owner. I put money aside for capital expenses, vacancies, repairs, all the things you hear about that come up with real estate. And as about my first year and a half into this, I started thinking, I've got this money just sitting in a checking account for CapEx, for reserves, for vacancy. What else could I do with that? I wanted to save my other liquid capital in IBC. Why can't I do this with the CapEx and everything else? And so got back together with Joey and we looked at starting policies on my two girls. So I was, hate to say it, this is a bad word on this podcast, but I was doing the traditional 529 plans, right? I didn't know what was going to happen with college. And I started looking at the money that I was bringing in every month from real estate and putting it into CapEx. And I was able to set up a policy on each of my girls that is really now set up to purchase their first car, right? To become the bank, to start teaching my family about this financing function of our lives, to fund college if they choose to go to college or have the ability to do that if we choose to do that, but also potentially be a down payment on a first house, right? It's given me more options. I've gotten creative with the dollars that I was saving anyways somewhere else, and I've just put it into a more efficient container that's going to give me more options in the future. And so that's the first step is we're trying to save money, right? That's the first step in the process.
And if you really want a great example, visual of how most of our clients go through this process to understand how to save money, what money should they be using to implement this, go to wealthwithoutwallstreet.com/PIOS. And in that, we talk about how do you get to a point where you can visualize your active dollars and what you're actually spending on a monthly basis. That excess cash flow becomes the funding mechanism for the infinite banking concept for the 99% of the people who start. So go to wealthwithoutwallstreet.com/PIOS, and that'll give you a great visualization. There was nothing worse than walking into class when you're in school and the teacher saying, "Pop quiz day." Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
Ernie, tell me another step within the infinite banking concept that I need to understand in order how to use it.
Yep. Well, I agree with Jamie. First step is to save money. And one of the symptoms of saving money is having money, which is that not the number one first obstacle that people encounter in becoming financially free, is not having access to money. So if you can do that, you're well on your way. The second step is to organize that money, is to control that money. Imagine if you're building an army, you're recruiting soldiers into your army, and you did not define for them a role, you did not give them a job. How effective, how motivated, how much victory would your army have? Not very much. If you were growing a business and recruiting employees and did not give them a clear job description, did not give them direction, did not define for them or organize for them where they fit into the organization and where it's growing, how much success do you think you'd have with that employee? Not very much. So if you save that money, you might as well organize it. And I'm going to just, again, I'll draw this out, share it with you in this way, how I've thought personally about doing this and how I share this with my clients. So as dollars are coming in and they're being stored, they basically ought to be categorized into two places. Number one is either reserve. Number two is opportunity. When we organize reserves, I think it's wise to start with your personal reserve. So with your family, how much capital do you want to keep in reserve at any point in time? And for most of us, that's a number of months. Between you and your spouse, do you feel comfortable keeping 3 months of your reserves, 6 months, 9 months, a year, more than that? If things really did go sideways, would you compress or reduce those monthly expenses? And are you considering the total lifestyle, or are you considering your reduced or livable lifestyle? What is it? What is that total number in your personal reserve? It's a great place to store it. Great place to keep that is in those insurance policies inside of this process that you're setting up to store cash. The second thing is if you have any assets or if you're running any businesses, have any interest in any business, and you're keeping aside any reserves. Jamie, you mentioned real estate. I can relate to that. Real estate investors commonly are keeping money kept back for maintenance. You said CapEx, capital expenditures, repairs that you're anticipating needing to do, any vacancies that you're expecting to have, property taxes that you're going to need to pay. That is a great addition to your reserves, business reserves. And if you have multiple businesses, organize those dollars inside your insurance policy, inside of this infinite banking concept. You can total that up. The third thing is your income taxes. If you're a business owner, if you're a highly compensated salesperson, employee, there may be taxes that you owe. And for me personally, I take those tax dollars that I'm setting aside and I hold them inside of my insurance policies inside of this system. Take those three things, add them together, that's your total reserve. Now here's the fun part. If you know how much access to cash that you have, and if you know the total dollars that you're keeping in reserve, the difference is your opportunity bucket. And that opportunity bucket is for you to finance any liabilities that you want to have to support your lifestyle. Or what we love to help people to do is grow so that they can, with knowledge, with more safety, with less risk, invest in building businesses and purchasing assets that create cash flow, passive in nature, that exceeds monthly expenses. So setting up, organizing those dollars helps you know exactly how much cash you have for those opportunities so that you can regularly, more aggressively, more frequently, and with more success, get those active dollars stored to create passive income in return.
Oh, I love that. And since you're on the sharing train, man, you know me, I love to talk and share all at the same time. So if you're watching on YouTube's here, you're getting extra bonus points. So we were just talking about this. How do we take our active income and turn it into passive income? Because that's the objective. When our passive income exceeds our monthly expenses, we become financially free. One of the steps we said a second ago is that you understand exactly how much money you have coming in, And then you start to figure out how much money do you have going out for fixed expenses and for variable expenses. And then that leaves you money left over to put into your infinite banking concept. So if you're trying to figure out how much money should I use to fund my infinite banking system, this process gives it to you. But just to what Ernie just said, is once I understand what my reserves are, all those expenses that I'm holding off to the side, and taxes is one of those great ones. Sometimes it's ways to pay off debt and other things. That leaves us with dollars that we can use to go buy what? Assets, right? Because assets are what produce passive income for us. So when that passive income comes, then we can send it right back to ourselves and we can repeat this process over and over and over again. Well, you may ask, what assets should I be buying? Well, in order to know that, you need to understand what your investor DNA is. Your investor DNA is specific to you. Your investor DNA shows the way that you look at the world, and it also looks at the resources that you have available. So you need to understand your investor DNA in order to be successful in that. You need to have an investor buy box. All of these are ways that you can become more successful as an investor, but you have to know those first. If you have those assets being produced as a business owner, does that not create freedom for you? Does that not reduce the stress that you have in your life? If you are able to do this on a recurring and repeating basis, does that not allow you to do more of the things that you want with the people that you want, where you want? Well, I think the three of us would all agree. All right, Jamie, if somebody wanted to know what to do next, what would you tell them to do?
I'm a visual guy as well. I love watching y'all draw all over the screen. My brain doesn't work fast enough to do both at the same time. So I love that y'all can do it. But if you want to go watch something and to continue this education, I mean, I think the best place to start is wealthwithoutwallstreet.com/IBC. That'll take you to a webinar we did that'll dig deeper into IBC. There's some other resources that you can find on our website as well if you want to listen to podcasts or whatever. I want to point, since we're talking a lot about, and we seem to talk to a lot of business owners and high-income professionals, we did a podcast not too long ago that I'd encourage you to go find on YouTube. I think it was episode 516, Why Business Owners Use Whole Life Insurance. We'll dig a little bit deeper into the whys and some of the benefits of this as well. That episode will teach you kind of how to use IBC to grow your business and accumulate cash to get ready for whatever economic conditions are coming. We know that we're in an interesting time right now, so we want to be prepared if something were to happen as business owners. Also, to Ernie's point, how to use IBC to alleviate the tax burden for the business or to store the tax burden for the business might be a better way to put that. And also kind of taking it to the next level, right? This is a high level podcast today, but how to use IBC to attract and retain top employees. I know that is a huge benefit to business owners as well. So I encourage you to go watch at least those two things, the webinar at wealthwithoutwallstreet.com/IBC, and check out episode 516 of the podcast on YouTube as well.
Yeah, go to YouTube and type in Wealth Without Wall Street. We have over 1,600 videos on there. There's so much content. You can become well equipped by just going through and figuring out those specific tools. I love that. Ernie, what would you tell someone to do after hearing this podcast?
Yeah, well, if you're a fact finder, appreciate the original source, you can do the thing that we mentioned at the very beginning of this podcast, or do the thing that I did the very beginning of my exposure to this concept, is read the book that we just mentioned. In fact, I very clearly remember Russ pulling into the Wealth Without Wall Street office. Man, it was so great to just park in that parking lot, walk right in the front door and to the back of your corner office with that giant glass wall, sit at your desk that had that table that was honestly too big of a table, too big, too heavy. It was really nice. And you opened that drawer and pulled out a really clean, new edition of that Becoming Your Own Banker book and gave it to me. Made a point to show me your version of the book, which was not so clean anymore. It's all wrinkled up. But read that book like I did the very first week that I got introduced to this. If you are a super fact finder, if you like to hear it from the original source, you can get that book anywhere. It's on our website, wealthwithoutwallstreet.com. If you go down to the bottom and click Infinite Banking, there's a link there to purchase it. And that comes straight from the Nelson Nash Institute, which I think is kind of cool. I mean, you can also find it on Amazon, of course. but I encourage you to read it if you're that type of person.
100%. Read that book. And then after you finish reading that book, go to Amazon or go to what'swhatwallstreet.com/new book and buy a copy of this amazing Amazon bestseller called Wealth Without Wall Street, 3 Steps to Freedom Through Passive Income. And we break down the infinite banking concept within there. And we talk about how you can use it to buy assets. How do you know if you're the best investor? What investments are tailored to your specific investor DNA profile? And what is this all about in the first place? How do we get back the one thing that we want more of that we can't buy in the future? And that's time. The last thing I would say is if you're like me, you probably love to talk and you want to ask questions immediately, right? Like there's no time to waste. And you want to get on the phone and you want to ask questions of, is this a fit for me because fill in the blank? Or should I expand my system now that I have access to more cash or whatever it may be? You want to talk to a coach. And we've set off 15-minute slots for our coaches to be able to answer those questions for you for free. So if you go to what'swhatwallstreet.com/free call, you can set up a time with them and be able to ask your questions, get your answers immediately so that you can figure out what is the right next thing for you. Jamie, Ernie, thank you so much for jumping on today. Thank you for listening to this episode. Hope you found value. See you on the next.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.